Good morning and welcome to today's edition of the London Session Open. Today is February 24th, 2020, and it's 10 a.m. in the morning in London where I'm doing this market update. There's been a crazy move in gold, which makes perfect sense. So things have changed in the situation with the coronavirus. So up until recently, it's been a situation where the coronavirus was contained, but now we have problems in Iran, South Korea, and in Italy. And Italy, as you know, is really close to the rest of Europe. And we're already seeing some troubles over there. And that is why the gold prices are going upwards like crazy. All right, so we're going to talk about that. We're also going to talk about other stuff, of course, what's moving the euro, what's moving the German DAX and the S&P 500. Quite some big moves. The market's selling off. It makes perfect sense. Europe is a very small place, and we're all interconnected, and there's no borders, really. So it's very easy to come and go from one country to another. So we're going to talk a bit about that. Okay, good. So let's begin then. And if you're totally new to this is a daily market update we do here on investingcube.com and also on the ATFX YouTube channel, which is what we're streaming. If you are new to this one, just make sure you do click here to follow us. In the chat box today, we have Maurizio. Good morning to you, sir. I hope you're doing good. I hope the situation here is not affecting you and your family too much or at all, really. Anybody else that's in the chat box, you're most welcome to write. Okay, good. Let's begin. So we'll see if I can load that coronavirus chart, right? So things have changed quite swiftly, really, over the weekend. And so the coronavirus, the total growth had pretty much settled. So you see here we had very sharp rise, and this is in mainland China. If you get rid of all of that, so it pretty much looks like less of an increase. If you look here, like total new confirmed cases, it definitely dropped off. On the 19th, we got 489, and then less and less and less, and picks up a bit, and it's been relatively low. So things in China is looking to go back to normal. I was pushing towards that. In Guangdong, which is southwest, or north west from, or pretty much north from Hong Kong, which is the industrial part of China, they're loosening up on restrictions there because most of the problems have been contained to one province in China. And as you know, there's been on the lockdown. So things are starting to improve there. But what did happen and what did change over the weekend is we had this. Italy now is here. You got China with 77,000. You got Italy, and you got South Korea. These two countries have seen a big leap. You have others, and these are people I think that have been on the cruise ship, and the situation in Italy has really changed really quickly, and that is what's worrying people, because from being something contained to China, we now have South Korea, and then we have Italy in focus now, and that is really why people are getting worried. So it's around this section here, just south of Milan, as far as I can understand, and that's where most of the problems are right now. And I think there was about 50,000 people that they told them to stay in. They canceled schools as well, which makes perfect sense. So much like what we're seeing in China, where they're telling people not to go out on the street, stay home for the next few weeks, that will hopefully cause the number of the spreading to decrease. But it's really close. It's not too difficult to get from here to go through France, Barcelona, and these places here. You got Lyon, have family there, and then we have London, obviously, a big moat that stops things, but everything is super interconnected now, and that is what's worrying people. If we take a look at the other locations, you can see how it's starting to grow quite rapidly now, and it's usually during these rapid moves that the market gets panic. In the case of China, if you pretty much on the 4th, because it's all about let's change it. We can put on logarithmic. So this is the logarithmic. Helps a little bit. So when you have that aggressive run up, that is when people get worried. So around February 4th or so, the growth rate started to moderate, and you can see the growth rate now is pretty much not there, yeah. But in the case of other locations, we had a decent growth rate, and now it's sort of picking up, and that is what's worrying people. So in the case of gold, obviously the market gapped higher, and we had a bullish view on this market, and I do think we can probably continue to trade upwards. We're now very close to reach 1,700. Well, the 1,700 level was the same level we talked about here in the summer of 2019. We said a break to this level would trigger a major inverse head and shoulders, so we're very close towards that level. But obviously, the way the current situation is progressing, maybe we're gonna trade higher. It would not surprise me if we go up towards 1790. As well, what's quite interesting is that you had economic data from the US. The market PMI numbers, the service sector dropped from about 53 to less than 50. You get the manufacturing sector as well dropping below. There's a bit of confusion there though, because those indices, they're for the national level, and then you get the Philadelphia Fed, much better than expected. You got the Empire State Manufacturing for February as well, much better than expected. So you have a bit of contradiction there between levels for the national and then the different sectors of the US. We're going to have more of these from the different sectors of the US over the next few weeks. I think what's going to happen, and that also triggered the sell-up, because we're starting to see if these numbers persist, then that indicates that the US economy took a dramatic change in pace in the last in February, and this month, really, in the last month or so. And that is also why people are selling. So tactically here, what can we do if we want to buy some gold? So we talked about buying gold here already on the 18th, and we reached our target, which was 1645 on Friday. So if you book profits on Friday, I mean, I wouldn't, it's a perfectly rational thing to do. Now, if you look at this now, if we put fib from the very high to this low, then maybe around here on the 50 level, this level in particular is the 1629 level. That is where I will be looking to potentially get involved again and do something like that. It might never come back down. It might just go down a little bit and go upwards. The alternative could be if we create some sort of a pattern here, potentially, and then maybe we can go long again. Now, I would not sell here. There's a lot of people, especially new traders, they always try to sell. We had the breakout here, and I know a guy, he said, okay, I'm gonna buy, and he did buy. Went up a little bit, had a bit of profit, probably the first, like he saw this move, and then suddenly already from here, from 1609, he said like, oh, maybe this has peaked. And then, you know, he started to sell here, and I told him I don't trade against the trend. So, because he asked me what I thought. And it's the same thing here. It went up quite a bit. I do know that. Is it going to come down? Probably going to come down a bit, but I would still not be selling up here. A good example of this is dollar yen. You remember dollar yen? We said look to buy here, and then we said also you can buy here for this to go upwards. It went upwards. It was trading up here. And when we looked at this a few days ago, it looked overbought. I mean, it was no secret. And if we put fib from the low to the high, you can see we're at the first fib. And this is maybe it. Maybe we're going to go a little bit higher. However, though, given the situation, given the bit of panic you're seeing in the market, I would not be buying here. Usually in times of panic, the Japanese yen weakens or strengthens. So this could go down lower. So I'm going to stick with my view that from around 110.83, that's the better level to get involved. As for the euro, so on Friday, we did get some bad data, and at the same time, we actually got good data from the euro area. The market PMIs from the euro area was actually slightly better than expected. And that's a bit surprising because earlier you got numbers from, on Tuesday, you got numbers from Germany, and they said index, CEW index, and that was actually less good than projected. And then on Friday, you got the market PMIs, and they were actually better than expected. Anyway, you got a combination there of weak data in the US, strong data in the Eurozone, and that lifts things a bit higher. As well, there's no secret, the euro has been going down, 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 and down. Then maybe it needs to correct a bit. So what I said last week is people are probably going to try to sell on a correction, and I said 108.95, and I think we should probably continue to focus on that level. The alternative is this trade sideways, and then maybe we'll take out this low, and then we'll go lower. Pound, this is the pound versus the USD. So the pound is driven by, firstly, was within this triangle, we traded lower in the triangle here, and then we had a recompletion of the triangle here. The triangle gives us a target of 26.21. We also have a short-term downtrend, which is probably the better thing to focus on, and it's that we're creating these lower and lower highs. So last week I said people are probably going to sell at 125.59. I'm sticking with a view. Market went up and then it went down. We'll see what happens. You do have some lows here, but as long as you're below 130.68, this is the downtrend. Crude oil prices are down quite a bit. So a few weeks ago we said look to buy here for this to go upwards. It went upwards. The risk reward ratio on this was approximately, because the stop was down here somewhere, at one point we're quite a bit. So at its best it was a 2.3 times risk reward ratio. Now what's happening here is that the market went up, faced some resistance here, and now it's back again at support. Things have settled a bit now, but let's take a look at stock markets first, because if stock markets are going to trade lower, then I think this could also come under bigger pressure. And finally now you're starting to see some stabilization. But let's see here. I think in general, as long as trade above 50, 54, this is going to be a bullish uptrend. My idea when I did the analysis here as well was the fact that we had this massive slide. There was about 25% decline from the high to the low of the year. And the general idea was this, is that I thought the situation would have stabilized, and it was stable for up until now. And if the situation can be contained in Italy and South Korea, then that's good. And we still remain about 49.21, then this is going to go upwards. On the other hand, if things turn a bit crazy, then when we take out the low, then we're probably going to do something like that. Could potentially reach the 2018 low. Let's take a look at the German DAX. So this is the German DAX, and I updated this earlier today. So we were bullish, right? You remember? We're bullish above this level. The market cut straight through there. That's why we use stop loss orders. We contain the losses and, you know, avoid the big pain we see here. Now, this reminds me a lot about the situation we had when we had the first outbreak of the coronavirus in China. So when we had the break here, we went to the downside, and then here on February 2nd, the market stabilized. From a technical point of view, it was perfectly fine to buy, and here it's perfectly fine to be bullish within this range as well. So the trend is bullish about 12,876, and it's perfectly fine to be bullish here. But if we do take out 12,876, then we're probably going to trade a bit lower, probably down to 12,614 and these levels here. So what the trick here is, how do the numbers change from one day to another? In the case of Italy, just keep track. Like what happened in China, it was that the average growth rate was about 35% per day. So we need to keep an eye on this, and we need to keep an eye on this. As soon as the numbers started to go below 35% growth rate, that is when people started to relax. And we need to effectively just look. We could potentially look at this, which is other locations, and calculate the average growth rate from the beginning, but also maybe from here, and we can see how things are changing, and that way we can sort of know. The other thing as well, if you're really bullish, you know, there's nothing wrong getting involved. This is also quite interesting, and it's not heavily reported on. There's a huge amount of recovered people, and there are different ways of calculating the death rate. But some people say you should calculate the death rate. You add these up. So 2620 plus 2503. And then where is that button? There we go. 2620 divided by, oh, that didn't work. The death rate is actually quite high still, at 9.45 from that perspective. If you look at it from the total, you know, it's different, 9.4. If you look at it from the total, which again some people say you shouldn't, but that's what the government tells you to do. I'm not saying you shouldn't trust the government. Then the number is 3.2. We'll see what happens, but obviously there's definitely some panic because the death rate is around 10, and then between 10 or so that we calculated, and then you have the lower estimate, which is the this one here, which is the 3.2. So it's understandable people are a bit panicky. Okay, let's move along here. S&P as well is aggressively moved down quite aggressively. I think we were bullish. Don't remember exactly. I think it was here somewhere, somewhere around here. The market stayed quite heavily from the high to the low. That's a 4.6% decline, which is quite a bit. I think let's see what happens when the Americans join. If they're gonna open up and push price lower, I think they could do that. They can try to push price a little bit lower and see what happens. But overall, the integrity of the S&P and the integrity of the German DAX, they're all bullish for now. Don't forget that everybody was super excited just until recently. And I will continue to be bullish for now. But I think we covered everything. Let's see if you guys have any questions. Okay, so cases increased to 217 in Italy. Okay. Do you have a good website for us there, Maurizio, that you can share with us? Maybe it's okay if it's in Italian. It will be good to keep track of things. So obviously it's still morning. Well, yeah, it's still morning in Italy. Soon lunchtime. So from this number here to this here, that's a growth rate of 38% in Italy, and we just started the day. We still have more than 12 hours to go. So this is what you're going to keep eye on. Again, it's the change in the growth rate that is where, and then that what happens here, more importantly, is that it knocks out production, which makes perfect sense. People don't go to work, which makes sense. You need to stay indoors. And that is, I think, the biggest effect and risk here. Okay, cool. Thank you, Mauricio. Okay, good. All right, we're going to wrap things up. And if you guys have any questions, you're most welcome to reach out to me on Twitter. I'm available as well at AlexFX00. I think what you could do as well, of course, if you're not already doing it, make sure you follow us on the ATFX channel. Just click on that button and you come here, and actually it looks like this. It looks like this. When you're not logged in, it looks like this. It gives you the possibility to subscribe, and when you subscribe, there's like a little bell button. If you click on that, you receive a notification every time I go live. And we do this update Monday to Friday here on the ATFX channel. Okay, guys, have a great day. Stay safe out there, and I'll see you guys tomorrow around the same time. As well, don't forget to check out the homepage. We do have a lot of content here. You might not agree with everything, but it's always good to check it out. What we try to do differently compared with a lot of people is that we always try to add a chart. Okay. Reason for adding the chart is that a lot of people are just going to give you this. They're just going to give you the news bit, which you can get anyway. And so we try to give you the news bit, plus we try to explain to you why the news is important. And then we link it up with a chart. Now, the analyst might not always be right, but they can definitely give you some ideas and on what levels to look for. And that is what we're trying to do different. We're trying to combine all of this to hopefully help you guys with your trading. Okay, we're going to wrap things up. Have a great day, guys, and I'll see you guys tomorrow, same time. Thank you, and bye.